The weekend has arrived. Happy Friday, guys. Hopefully you've all got a nice weekend planned ahead of you. This is going to be another daily cryptocurrency market update. And if you guys are new around here, every single day at 1 p.m., we release an update just like this one to help you guys stay up to date with the latest and greatest things happening within the crypto space and also the markets broadly, not just crypto, stocks, and everything in between. And that's exactly what we're going to be doing in this video. We're going to start things off with a clip of Sergey Nazarov, the co-founder of Chainlink, the CEO, essentially talking about the future that we're moving towards. Everything is going to be put onto distributed ledgers. The entire financial system is being changed, and we want to make sure that people stay alert to that and potentially capitalize on some opportunities that may come as a result of it. And then we're going to move on to some news. We'll be looking at Bitcoin, of course. I have to admit, short term, I'm a little bit stumped. Short term being the next couple of weeks. Going into the end of September. October and November, we know, are historically very bullish months for crypto, but we will see. We'll look at, we've been really sort of going into what we'd like to see, what the scenarios are, down and upside scenarios. And then I think I actually want to spend a bit of time talking about the Bitcoin 4-year cycle theory, because we are following it, which is interesting, I think, and we'll be looking at it from a number of different points of view. This is a chart that we have been showing really since we started the channel. And it's amazing just how accurately we're following the 4-year cycle theory, despite everything going on with interest rates, so on and so forth. And then we're going to dive into a little bit of boring macro stuff going on, because it's really important that you guys understand the broader picture. And the big question on my mind, I did a great Patreon update yesterday. If anyone wants to join the Patreon, find out what I'm buying, where I'm buying, weekly meetings with me, etc., please do consider becoming a Patreon by checking the link out in the description, or you can go over to Allincrypto.com and click on the members club thing. But the real question right now on the macro is what's going to happen with the bond market and the yields, and how does that resolve itself? And that is going to roll up into a soft, hard, or something in between kind of a landing for the economy. As bonds are central, they are the cornerstone of the financial system, the fiat systems. When you issue money, that's the asset, and the liability, of course, is the debt that backs it. And the problem is, with everything that's gone on over the past nearly 3 years now, nobody really wants the bonds, and that's causing issues. We saw Silicon Valley Bank, we saw the gilt market, so on and so forth. So we'll get into that. I don't want to bore everyone and put everyone to sleep before we started the thing, but it's important for people to be aware of these markets and familiar with them. I want to start things off with a clip from Sergey, who, of course, is the CEO of Chainlink. Chainlink have been absolutely killing it. Chainlink, I think, are going to be fundamental in the new world that we're moving towards, which is a world built on distributed ledgers, and whether that be a DAG or a blockchain. DAGs are very interesting. We think the rise of DAGs is here, and they offer some very unique trade-offs in regards to sort of linear archetype blockchains. So let's get into the clip, guys. Then we're going to get into some news, talk about Mt.Gox a little bit, then we're going to get into 4-year cycle theory, and then we'll cover some boring macro.
So I think the people in this conference are going to be the world leaders in packaging assets into tokenized financial products, because they've been doing it, just not in a blockchain-based way, for decades. And then there's going to be a bunch of competition, and then your decision as a decision maker will be, do I want to participate in the blockchain economy, tokenization, real-world assets thing? And it'll be very similar to the internet decision. And if you don't participate in it, it'll be a very big problem. So I would say the first answer to your question is yes, you should plan to invest in hundreds of people the way things are going. And then the second part of your answer is there's technical solutions like the stuff we make at Chainlink and something called CCIP, which is a cross-chain protocol that can lower the technical cost of integrating into all of these chains and being able to interact with all these assets. And so there are technical solutions that can reduce the cost. But I think a lot of the entities and institutions here will, I think the whole global financial system will run on blockchains, period. So everyone here is going to be in the blockchain industry eventually.
There we have it, guys. I happen to 100% agree with that. And that's why this channel was founded, to, I guess, alert people. We're a bloodhound on the scent of the way things are going. And I think we could get very philosophical. And maybe we should do, I'm going to do a lot more videos with just me and the camera, talking about, interesting topics related to blockchain and crypto, like does a blockchain need a token? These sort of things, which I think is, for me, interesting. I'm sure some of you guys that are into this sort of stuff would perhaps find that interesting. But I think Sergey's totally right. Just like the internet, we're very lucky that we've got the internet to compare this to, the Web 2 to compare Web 3 to. Because if you didn't get on board with the internet, you went out of business, quite simply. You know, we know the story of Amazon and the people they put out of business. Let's move on to a little bit of news. It is quite a lackluster news day. Guys, please do come out and check allincrypto.com. You know, we aim to be one of the main media outlets as far as our website is concerned to help you guys stay up to date. You can subscribe to it. It's a totally free service. There's nothing paid for here. We just want to make sure that people stay up to date on the latest and greatest things going on. We did a great article on the Fed's paper on the tokenization point of view. They also mention a number of DeFi platforms that we cover, and we keep you guys up to date on a number of things. A little bit of news. Mt.Gox is a continued. I've been covering Mt.Gox for as long as I've been in crypto, and today or yesterday, the 21st September, a letter went out that essentially said they're postponing the repayments that were supposed to take place starting from the 31st of October. Now, Mt.Gox has been a dark cloud that continues to pop up over the crypto space in regards to being a massive sell pressure. I'm not sure it's going to be that much of one. And actually, we often see the opposite thing happen on these events. So just to keep you guys kind of up to date on that, because it is a continued crypto story, I'll leave a link to this document in the description. Let's move on to a little bit of price action. Let's start off with a Bitcoin 4-year cycle theory and work our way down. So Bitcoin follows a cycle theory that it essentially has been following for its history, and we can look at the Brave New Liquid Coin Index for this. This is a chart that I've had on for years, where we've been sort of looking and breaking up the 4-year cycle theory into a kind of, what would you call this, a traffic light system, perhaps? And it seems to be following it pretty perfectly. You know, the Bitcoin 4-year cycle theory is centered around the halvening, which reduces the supply by half, that hits the open market. That is coming very, very soon. And it is remarkable how we're following this. And are we going to continue to follow this, which means we've got a pretty epic bull run ahead of us? Well, that actually lines up with our kind of overall macro thinking and potential call that the Bitcoin revival, we were one of the only people getting back into the markets here. And if you look at altcoins, and you guys can do the same thing, this is where we've been accumulating altcoins from. You know, if we take it off a log, it's even more drastically sort of apparent. But, you know, we think the crypto revival's here. We're going to pull up the Brave New Liquid Coin Index, which is the longest chart of Bitcoin that we have. I very much think you are just following the 4-year cycle theory. These vertical lines that we have are when the halvenings occur. And you are now less than 200 days away, just above 200 days away from it. And you can see just how accurately we are following this. Are we going to go into the halvening and then experience a real bull, into a crash, which is our comparison that we think is 2006, is kind of late 2006 is where you're at, into, you know, 12, potentially 24 months of goodness for the markets. You know, we've been very right on our stock market calls. We'll talk about the stock market as well. You know, this hit our target for loads of winners that we've called in terms of the stock market. We got higher targets for the S&P. S&P's having a bit of a down day. I think it deserves a bit more of a rest and a pullback. And we looked at this potential double top scenario, or a kind of A, B into a C manner kind of pullback, as we've seen previously. The S&P likes to do this, but we do think it picks its feet up. We do think there's a good time ahead. We think that right now you are very much suffering from a macro uncertainty that really centers around the bond market and what it's going to do and the repercussions it's going to have for the broader macro at large. I often lose people when I start talking about this sort of stuff because it is quite complex understanding the bond market. And I hate the term macroeconomist or an economist. An economist basically just means someone that's got an opinion on the economy. Opinions are 2 to the dozen. You know, we hear them all the time. But we're interested in sort of factually based opinions, and the bond market is absolutely central to everything. And the concern is, which is throwing uncertainty onto the markets, and you'll notice the market sort of subsided a little bit after Jerome Powell's speech. You know, you've got inflation that continues to kind of raise its head, if you will. You know, this is true inflation, which we track. It tracks a larger basket of commodities and other things that go into inflation. And you can see we're in a bit of a sticky period here. Couple that with our calls for oil to be in a breakout. We now think oil is in what we define as a stage 2 breakout. This is stage 1 base, stage 2. You can find out about stage analysis through joining the Patreon. The bond market is the interesting one. Because here you had Silicon Valley Bank, just to show you how pivotal things are, which really threw doubt on whether they could continue with the bond market. And then if you look where the markets really started to rally and get aggressive, it was around about here, because this goes down. The typical correlation between bonds, and I'll just cover this very quickly, the stock market is that we're going to have to put this on a monthly. Bonds up, risk up, because it's a representation of the environment they're in. And if you see what's happened with bonds, this causes doubt on everything. So we are watching this like a hawk. This is ultimately going to filter into our overall view on things, how the bond market resolves. Do you get that spike in yields, which I think people are worried about, because then that means the opposite end of that is bonds going down, which means that there's going to be potentially, like we saw with Silicon Valley Bank, some pressures, or the gilts market. And then what's the reaction out of that? And does that spike even happen, or is it kind of a soft landing where inflation comes down? There's no more need for the continued pressures, etc., etc. That's going to filter into crypto. It's not a crypto-related topic, but it's something that we absolutely need to keep an eye on. So I've kind of jumped into the macro a little bit there. We'll jump into some sort of data that's continuing to come out. But going back to Bitcoin, I'm pretty unsure on the short term, and I'm never afraid to say that. We had expressed our uncertainty here. We said a big move's coming if you look at historic volatility. And we're even at even lower volatility right now, which is typically actually got some bullish connotations to it. We had an altcoin that group was very much on. That was a perfect example of what happens at very low volatility. This was a 50% mover for us, Mt.Gox. But I'm unsure. I would really like to see, and you can see the market itself's unsure with these candles. You've got kind of spinning tops, dojis, shooting stars, a number of things. I would quite like to see we've got the head and shoulders threat for the downside. We've got the deep ABC potential, although it could have done it. I would quite like to see something like this. It would have been a bit more pain, but it would set us up nicely for October, November. And it would be in a similar manner to what we saw over here. This is something that I'm watching. We aren't particularly bearish right now at all. From an investment point of view, we're long. From a trading point of view, we're not really touching things. And you'll notice that's quite a trait that's throughout the space. You're not really seeing people throw out big trades at the moment, because it doesn't really make sense. Certainly if anyone's, I think most good traders that I talk to, and I talk to many, they're square right now. They don't really want to be preempting something that they could be 50% on the wrong side of, and that could be very painful, even with stocks, because crypto is just a very volatile game. It makes me laugh when people say, oh, you've got to apply risk management and traditional risk management to the crypto space. How the hell do you do that? I was about to use profanity there, but I didn't. It's very hard to apply traditional risk management to the crypto space. But I would like to see us kind of set up similarly to here into what could be October, November. And everyone was very bearish here. I remember trading this myself. You've also got similar points where you've done this and you get this kind of head and shoulders risk. I think that, you've got resistance flipped into support. I think that that's the exact same thing that's happened here. And actually stage analysis kind of dictates that this is a stage 2 until you've proven otherwise and started to come back down. So I think you could get a real lift off from here. We will see. Right now, there's no volume in crypto. There's no volume on exchanges. There's no volume anywhere. And this is, we see it on YouTube views is a good kind of barometer, I think, for the space generally. We do very well for the size of the channel that we've got, better than the 100 and 200, 300K channels in terms of views, but which says a lot. But nobody's really that interested in crypto right now, and it's still that paper bag right now. It's still in the wind, it's still a tired swimmer against what is quite a strong current, and that's why you saw the little drift off yesterday with the stock market taking a little bit longer to rest. I mean, that would be a very disorderly head and shoulders that I wouldn't really put much credit into. And yeah, gold yesterday, and of course the dollar on the uncertainty as an uncertainty trade is continuing to go. So we don't really know what's going to happen with the dollar. The dollar actually could then set up for some sort of a bigger head and shoulders. There's a lot of forward scenarios that we're looking at, but we'll keep you up to date on all of these on the channel. Yesterday, the UK bank the Bank of England decided not to raise rates, very much in line with Bank of Canada, Bank of Australia, which is why we had a bit of an inkling that the US and the UK weren't. And then you had jobless claims in the US, which is, again, putting a bit of a spike, you can see down here, putting a bit of a spike into the dollar. Jobless claims came down. There's a very good, I don't want to, there's a huge correlation between the unemployment rate and markets. And this is all stuff that you don't get on basically any other crypto YouTube channel, guys, because people don't understand it. We've made it our business to understand it. And that way we have, I think, a way better scope of markets and how they all work. Today, you've got a lot of PMIs, I believe, which is going to be very interesting. You've had some good ones come out so far in Europe and GDP. It's really, Great Britain. It's really a mixed bag. But you've got the US coming later on. So that's going to be interesting, all filtering into the dollar. A lot of uncertainty at the moment with yields, inflation. We need to get kind of past these hurdles, I would say. And hopefully that occurs with October, November for us to see full send. On that note, I'm going to love and leave you. If you enjoyed the content, like, appreciate it as a comment. Don't forget to check out the Patreon, check out the website, and come follow me over on Twitter because we are regular posters, serial posters on Twitter with, some of the weird and wonderful things happening within the crypto space. See you all in the next video, guys. Thanks for watching.